Welcome, G3 patrons. This is the report for the week ended April 17th, 2020. Had a pretty good week in the market. We didn't trade so hot, but we are up 38% through the 17th. Welcome, Satchel Frost, Carmen, Mateo. I don't know if I mentioned you before, but they're new Tier 2 patrons. You're going to see the stats for the YouTube videos go down a little bit because they're not going to get these weekly videos until a week later. So I'm going to make sure that Tier 1 and, of course, Tier 2 patrons get the video in advance of anybody else that's trying to get to freeload or whatever. Okay, let's get to the infamous schedule we had our first session on Saturday. I tried to salvage the thing. I couldn't do that. I messed up so bad. I was nervous, I think. But anyway, there were great questions, great participation. I even think I let some people couldn't get in because I set the thing up so that I had to let you in. That was stupid. Just all kinds of errors I made the first time. It's the first time I've done this in 10 years. So, okay, so I fixed this schedule. And for next Saturday, we're going to do another session at 1:30. And I'm going to have this schedule looking like this. And then we can talk about it again, and I can go over anything that's not clear. I'll try to clarify up some of the points that were made. Obviously, to me, it's self-explanatory, but it probably isn't to a lot of people. But I didn't have these in here, and so I added them in. So the dark green means that this ETF made a new all-time high. The pink means it's below the 50-day. The white means the 200-day moving average. The white means it's above. White is good. Red or pink is bad. Bear market. Okay. Likely trades for you Tier 1. When I set this up, I look at the futures the morning before. This market's so volatile you can't look at it the night before. Okay, and maybe I'll show you that in a minute, a little bit here, but. And then before the market opens, I send it out, and I've got these would have been highlighted. All these yellows, we got into every trade but one, were all highlighted with green. Okay, and then this is a day trade that we just trade to try to catch when the market moves the next time. The other thing I got out here, it's the closed trades are in blue, and I show the gain or loss on them. So we made $50 on that, a scalp. And we made almost 500 on the gold trade. And then this column shows what happens if you get stopped out. We got our stop set. They're theoretical, of course. There's the stop out. So if everyone, like we on SMH, we'd lose $106. We'd make 212. The key to trading is keeping your losses small, managing your money, and letting the big dogs go. Making $500 on a trade is a good deal when you got $100,000. That's to me. That's me. I'm a conservative. Okay, I know guys that would never even think of trading less than 10,000 shares. Okay, that's not for me. I could do that, but it would drive me crazy. So you have to get to the level of risk that you're happy with. Now, beginning of the month we had 18. Now we're down to 14. So some of these, that's an inverse. But gold was always there, and so was this. But IWF, QQQ, technology, and all leading sectors, they're all above their 200-day. As more go above, then I'll be convinced that we're going into more bubble territory. Nothing wrong with that. We'll make money on the way up. We definitely will. Market update. It was a wacky week, really. Just amazing. Monday had a big reversal. We were down big. The news was bad. We gapped and went on Tuesday, went it up 6.1%. And Wednesday, it was just crazy. And then I thought it's going to roll over on Thursday and Friday with all the bad news that came out from all the reports that was out there. And it didn't. It surprised me. The statistics here are getting better. There's some more green on the screen there, and I've put these in white. So we went up, we went down, we went back up, we went up. And that's good. That's headed in the right direction, but we're still in a bear market. We're not quite out of this bear market yet. And I still think it will be amazing if this isn't a bear market rally. But hey, folks, I've been wrong in the past, and I will be wrong in the future. Okay, here's the SPY. All right, I show how this is set up. If we went back to that bar, those bars right there, I would have probably set this up so that it would have been around 250 or so. And then when we went there, we would have went up, and then we got stopped out again. So we would have had to have went 1, 2, 3, and we'd have moved this to 265, and then we would have entered here, and then we got stopped out again. So now, if I was here, I'd go 1, 2, 3, and I'd set it at 270. And I probably had it set there. But now we've got a new high, a higher high, and that's a good thing. And that's a bearish candle. That's a hammer type candle. So I have to set the stop at 1, 2, 3, 275. 285 was our entry, and we're in. So we're in the SPY, and that's good. Okay, you can see the volume is real high during this period we're in compared to this volume here, which is a normal market. This is more of a normal market. That's a normal move for the ETF SPY, and everybody buys the SPY. You can see the volume on it's huge. So that's the SPY. Let's look at SMH. This is one. I'll spend a little more time on it. Okay, now what I do here, and I did it on the SPY there, the blue thing is the post of your flag. Okay, and I set it so it coincides out there with, there's where the high is. In this case, it's above. We are now living above the blue line. It gets covered by the red line there. But so this would be a bullish flag to me. So I expect this one to move more faster and maybe go up and make new all-time highs. It looks to me like that's what it wants to do. Why it's doing that, I haven't a clue, but that's what it wants to do. So I'm going to trade it, and so we're in it. And we got in it when we got stopped out here, so I had to set the loss or the low, going back to our schedule. Whoops. Trades set up at 126. See, that's the swing low. It's not a very long swing, 2 days. Oh, no, I didn't mean to do that. Okay. The swing low went, in 2 days it went down and got stopped out. So I set it at 126, and sure enough, we got in at 131.50. Now, how did we get in that? That was a good question. I don't know who asked it, but how do you get in that? Well, this thing opened up at 133.95. And when it did that, my system immediately set the stop out based on the 3% rule that I set for them that day. And its trading range for the day was 133.95 at the open to 130.86. So we got in at 131.50. How did I get in at 131.50? I set a stop loss order. I just said, hey, buy this thing if it gets down to 131.50. And I took off. I did this one at 22.50 and all the others that we weren't in already. Now, some of these we were already in. The only one I didn't hit was a mistake anyway, and that was the ITA, and I'll get to it in a minute. The one we trade daily is the SQQ. So that's how I do it. And I didn't have buy on that, and people were confused, and then I hadn't updated the schedule. It won't happen again. I will make sure I do this properly the next time. So let's take a look at let's look at the short trade that I just put on. First, I want to see, I've got the post for this, and I go from the high to the low here because this is the inverse. So when the market was, we got in probably here or here on the long side. I think we got in right there, and we made money, but you can't trade it and hold it for very long because it goes up and then it goes down, down, up, down, all the way around. It's wild and crazy. But this is why you don't hold it now. There's no stop. It just keeps going down. And we're currently at all-time lows for that. I think it's 1235. Yeah, it's an all-time low. So I've got it set here at 1450, where I would say, hey, if it gets above here and lives above here, I probably look at maybe holding it overnight or whatever instead of just day trading it. But I trade it on a daily basis, and this is really hard. So how in the world did I set the entry point? Well, that's a good question. It was not normal. Let's just say that. Well, basically, I look at this low. I put it in at 12, and I look at the change and said, well, it looks to me like to get from all this junk, you need about a 70-cent move. And so I set it at 70 cents. And so I do nothing in the first hour of trade. That's this. And then I got in at 1270. I don't know when I got in, or the first hour, first few minutes. I don't mean the first few minutes, first hour. I mean the first few minutes. I let the big boys get out of the way, and then I get in. I send an alert out, and I got in, stayed in. When it started living below the red line, that's my guide. Now I had set the stop loss at 3%. It never hit 3%, but when it got below here, I moved the stop loss up to 1280. So we made a dime on it, chump change. I'm not trying to catch this move here. I'm trying to catch a move where it goes woo, like that, and then you make a couple $1,000 or 1,500 or 1,000 or something like that. Because when the market rolls over and all these people are leveraged to the hilt, it's gonna turn quick, and it's nice to catch those moves. Well, I think we've made $17,000 on just trading the SQs this year, so I'm going to continue to do it as long as it pays the dividends, right? Oh, great. Now let's look at ITA, the one I screwed up. Okay, this was my mess up. I had ITA and IYT mixed up, and when I not from here, but from where I'm putting them into the schedule that I sent out to everybody, and Mateo caught me on it, and I thank him for pointing it out. I didn't know during the meeting that that's what had happened, but you can see this just is moving sideways. It really hasn't even gotten above that high back there. The swing high, if you will, is 159.94. But because of this activity, I've kind of said, hey, I'm just going to let it go at 159. 1, 2, 3, the last three. So if it gets above that, I'd say get in it, and I would take it. It's quite a ways underneath its 200-day moving average, so it's got a long way to go. But and Boeing, you got Boeing in aerospace and defense, and Boeing's in trouble, big trouble, I think. But all right, let's take a look at IYT. Again, it's a sideways move. Went up here and peaked, and then we went down. Okay, so 140. If I could go 1, 2, 3, I could set it at 150. The reason I've got it at 152 is because we've never overcome that high. So really, I never had to change it from here. 1, 2, 3. So all this movement in here is all sideways. And again, transportation is important, but you think the airlines and the truckers are doing great, thank goodness. But the airlines, and you think Federal Express and UPS and all those guys are going to make millions on all the things people are buying with their $1,200 checks? I think they're going to pay the rent with their $1,200 checks. That's what I think, but I'm not the smartest bulb in the deck, I guess. Okay, here's the S&P 500 one-week chart. This shows us what moved the markets. Obviously, healthcare, medical, Johnson, all these guys, Gilead, and all these guys are trying to get this coronavirus. And then, of course, services, Amazon, Walmart, Costco, all those guys, Netflix, technology. Why Apple's not in technology, it beats me. And P&G moved. I don't know what it did. I think they discovered a test or something that everybody likes. So that's a good thing. My final thought is this guy's a really sharp guy. Seeking Alpha guy. And this guy is really sharp. Stanley Druckenmiller is a trader from the George Soros. I don't know how he stands that guy, but he says basically it's the Federal Reserve, it's liquidity. So we've got a market that is being propped up by the Federal Reserve. And Main Street is capitalistic, but Wall Street is socialistic. And this has been going on ever since Greenspan. I don't know what these guys are doing. I mean, I really don't understand it. How they don't want price discovery in the markets, and they want people that are older and retired that should be getting the bulk of their money made from just owning treasury notes and bonds and their allocations, their traditional allocations should be changed to 40% stocks and 60% bonds, right? I mean, if you're over 65, you don't want to have too much money in the market, but they're forcing them in the market, and eventually it's going to bite them. Now he thinks the melt up is coming in the form of a bigger bubble, and this guy is really sharp. So read him if you get time, and that's it for me in this session. We will have our next session on Saturday at 1:30. I'll send out an invitation, and you'll be able to join at any time. It's Greg Gallagher. Good trading and good luck.